tarde, good afternoon to all of you, and welcome to this roundtable. We all speak Portuguese, so obviously we will speak English. We will address the topic of sustainable investment and business opportunities, and it's a pleasure for me. My name is Pedro Santos. I'm a journalist, and I'll be just moderating this roundtable. And our speakers, who I welcome, are André de Almeida Santos, his partner at Indico Capital Partners, and Gutman, managing partner of O Ventures. We will speak for a while, and then any of you can address us questions. Just please raise your hand whenever, and I'll pass some mic on to you. So, welcome. And maybe we'll start by introducing each a little better than I just did, and explaining your background and the relation with the obvious relation with the topic that brings us here today at Planetiers. So, if you please.
Well, thank you, Pedro, and thank you also, Planetiers, for inviting me to be here. It's a pleasure to be, sharing the same stage and being part of this community, at the same time having an opportunity to talk and learn also here with Luis about sustainable investing and business opportunities. I've been dedicating a good part of my life to sustainable investing, sustainable development. The last 2 decades I've been working on poverty reduction across Africa. That was 10 years in different countries and financing all sorts of different development projects, sustainable development, poverty reduction. Also, I did a few enterprises, a social enterprise, also with the initiative around sustainable businesses and social inclusion for women driving tuk-tuks and having their own business. Then I've also been part of it was around responsible investing, and that's what ended up leading me to my current hat that I'm bringing today, which is as a partner at Indico Capital Partners, which is, I would rather like to say, one of the leading early stage VC firms in Portugal. We dedicate ourselves to technologies of all sorts that have a meaningful impact in the world. In specific, currently I'm leading the Blue Fund, which is a 50 million euro fund dedicated to all activities around the blue economy, financing all that is good coming from the ocean or that is good for the ocean. So that's pretty much in a nutshell what I've been doing. I do all sorts of personal engagement on inner development and our roles as agents to provide a sustainable future.
Okay, great. Luis is a Brazilian, but he lives in Portugal for 8 years, I think.
Yes. Thank you, Pedro, André, and Planetiers for having me here. So I am the managing partner of O Ventures from Portugal. We have a mix in our management team with Portuguese and Brazilian managers. And I personally, I have been working with technology and innovation for the past 15 years in Brazil, Portugal, US, and other countries from Latin America as well. And we have other investment funds for different sectors, agnostic funds to invest in different sectors in Portugal and Brazil. And recently we decided to have one specific product to invest in sustainability, but looking for innovation in the layer of digital transformation. So AI, blockchain, other stuff to disrupt sustainability and to help companies to be more sustainable. So we created that fund. It's a 20 million euros fund. It's in the beginning of that process, and then we are starting to invest in Portugal, and our goal is to try to fix that gap between ideas and enter to the market and also scaling in a global scale. So we are entering that journey because we have this personal calling to invest more in sustainability and not only in agnostic sectors as we did before. So that's one goal that we have, and it's also very good to be here surrounded by people that have that same purpose that we have.
Can you develop on the topic of being agnostic? What does that mean?
So we have funds investing in technology, innovation, but for different sectors, like fintechs, marketplace, healthcare, and other stuff, looking for the best startups in innovation, developing, shaping the future, but in different sectors. And we also had investments in sustainability before, but we miss one specific product focused only in sustainability.
So you're not chasing specific sectors or industries?
Yeah.
You are seeking for transformation. What's the bottom line criteria?
Yeah, it's early stage startup before, right? Early stage startups. Early stage, I mean, 3 years, 4 years, 5 years old companies with new technologies, innovation, trying to disrupt different sectors. And one criteria that we had for the other funds is that we would like to find companies from Portugal that we can help them expand to Brazil, to explore the Brazilian market. For example, companies developing wine tech is not a good candidate to move to Brazil because we don't have like a big wine industry in Brazil. But fintech, for example, is a huge opportunity to grow. We are talking about a country with 10 times more people than Portugal. So it's a huge market. We have local people in Brazil. We have network, and we can actually help Portuguese companies to enter Brazilian market. And at that time, we realized that other VCs, much bigger than us from Portugal, they didn't have this specific skill of local people in network in Brazil. So again, we try to fix that gap and help Portuguese companies to thrive in Brazilian market. That's very good for them to grow and to scale. So, but again, now we are running this new fund, not agnostic anymore, but specific for sustainability.
Okay. André, help us out in the following. When we look at sustainable investment, some of us will be enthusiastic and thrilled with this perspective, and just screaming out, "This is it! Sustainable investment. It's everything that we should chase." And there will be some of us or others that will be more skeptical and will say, okay, these are just buzzwords. In the end, we're all looking for financial return wherever the sectors or whatever the sectors are. And show us the way in between these two extremes.
And that's a very sinuous road. I do believe that there's several tensions at play here when you talk about sustainable investing. But I would start by addressing what has been the movement in the last, I would say, 20 years, where there was this edge of knowledge around can firms do good and do good also financially. And so there was a lot of conversation around, if I have a purpose of investing with a certain objective of sustainability, of taking into account environmental objectives, even social objectives into my business, into those businesses, if those investments will also be profitable. And for quite a while, there was a debate open to see if that was actually the case. A few frontier and pioneer investors decided that would be a risk to take, and mission investing, meaning investment with the specific purposes of addressing environmental problems, specifically with environmental problems initially, but also with social issues. And there was a whole exploration around different new instruments, like impact bonds or impact investing. And this sort of movement paved the way to understand that it is possible to invest with the mind and the spirit of doing certain I'm going to use here good between commas, doing good for society, for the environment, and doing good financially. So there's enough evidence, enough studies that have gone across the market and have identified that there's not necessarily a trade-off. It is something that is possible, even at a given point, because when companies were addressing these sort of problems, they were exploring aspects of the market that were underserved or creating new markets for quality products that are sustainable, for circular economy, for addressing human issues that were not being addressed. Those markets tend to actually grow above the average. So not only they were doing socially and environmentally good, they were actually performing quite well.
I suppose that you agree that you can have both positive impact and financial returns.
Yeah, we do believe that purpose and profit can actually walk hand by hand, for sure. And investors investing in sustainability products, of course, they are looking for profit, for sure, but they're also looking for some kind of purpose. And our goal, our job here is to convince or show that it's really possible to have profit from those type of investments. And as André said, sustainable companies or companies developing ESG-related products or processes, they are better structured than others because they need to develop internal process, internal controls, governance, compliance to deal with regulators, deal with market demands, consumer demands. So they need to develop internal things that make them stronger and more in a better position to face changes in the market. So at the end, companies developing sustainability stuff, they are better prepared than others. That's how we see.
And why is that? I didn't know that. I suppose that many companies do have a lot of control measures and whatever because of regulation.
Yes.
And in this case, it's because of awareness. It's because of good practices.
Companies developing ESG related stuff, they need to deal with regulators, right? To share and prepare reports, KPIs, metrics, and the regulator is changing a lot the regulations. So they need to be prepared to that changes. So to survive and to thrive in this market, to offer sustainability things, they need to be able to deal with such changes. So internally, those companies need to develop process, controls, and governance to be able to deal with change. So in our perspective, this kind of skill make them stronger than other companies to deal with change. And we know that changes are one of the most difficult thing for a company to deal with. So the markets have a lot of volatility, the regulator change, consumer demands, and sustainability make companies to be stronger in that regard. So because of that, we believe that those companies can survive for a long term much better than companies that do not have such skills.
That's very interesting because what you're saying that you can not only bind purpose and profit, but also that these companies are not only better or good when they look at the end, but also through all the path, through the processes, not only. Okay.
The process and the value chains, the partners they operate with, because then this sort of engagement with stakeholders, and partly because I chip into it, the stakeholders that are involved in the whole business, from the suppliers to the several layers of suppliers to the partners, and then of course the communities. They're part of the idea that those are also a part of how you create the value within the company, and they need to be addressed in a way. There's a risk mitigation aspect to it, as you're saying.
Exactly. Yes.
Okay. Well, you just mentioned before that there are studies and evidence on financial returns with generating positive impact. What do those studies, evidence, or even case studies that you can mention already teach us on the key factors, on the mistakes to avoid? What can we learn from the experience and from the studies?
I think there's a lot that we learn already along the possibility of new business models that take into account what usually is coined as impact, right? Where you design a business not necessarily around profitability, but around addressing a topic that will generate scale and will generate profits. But the main goal is addressing the topic, the social need or the environmental regeneration or sustainability. And I think this is the point in the conversation where I think it's important to call it out, that sustainability is this huge term that serves for a lot of things. And one of them sometimes is to make things a little bit blurry, a green blurry window that comes in, because it involves a lot of things. And we just talk about ESG, environmental, social, and governance, which is pretty much, let's say, interchangeable with sustainability. It's around a perspective of safeguards, a perspective of do no harm, perspective of mitigating risks, hence the issue around companies being more robust and more resilient to change. But it also involves other aspects. It involves the aspects of not only not doing harm, but also are we doing good? And so here, what the body of evidence is telling us is something different. First of all, it's really quite hard not to do harm, meaning everything that we do, every action we take, from the point where we are building a factory, where we're going through a terrain, cleaning up trees, impermeabilizing the soils, that's a negative impact. That's doing harm to a certain part of the environment, even if the end might be to do a fantastic, recyclable, fully a circular product. What we need then to look is what is the net impact that what we're doing is having. Are we doing more good than harm? Are we doing more harm than good? So that's already something that nowadays, as Luis was well pointing out, regulators are starting to place higher emphasis on understanding what is the level of sustainability of businesses, and are they really sustainable, or they're just claiming to be sustainable. Yeah. And I think this is evolving frontier of knowledge and of data, basically. We're learning and demanding more and more from the company's data.
Yeah, guys, Pedro, one thing about what André just said is when we invest in sustainability or sustainable companies, it's really important to understand how to measure everything. So we need not about financial economics, but the impact they are, the positive impact, the negative impact, the net impact. So transparency is very important when talking about sustainability investments. So when we are dealing with our deal flow, scouting startups, it's also important to understand if such startups are measurable or not. If they are not measurable, we need to create ways to measure what they are impacting. As we are investing in that software layer, normally, not on the final asset, real asset, so softwares, blockchain, as I said, AI, it's important to us to measure how much that layer is impacting the customers, the companies using that software to implement sustainability stuff or to be more sustainable. It's hard, but we have that commitment with our investors. So we must share how much impact our investments are actually delivering at the end. Yeah. Not only profits anymore.
Yeah, there's that old saying in management that you cannot manage what you cannot measure.
Exactly.
Right? But in this case, the metrics are different. So what, I guess that you're telling me that you have to almost find out what the specific new metrics are for this, for ESG.
Yeah, and it's, for example, if you have some clean energy farm, like solar farms, it's kind of easy to measure how much energy they are creating or delivering. But if we are investing in software in the middle of that chain, it's really hard to measure the real impact. But we need to do that. So we have ways of creating new ways to measure the impact from the software layer. This is hard, but it's our commitment. It's important to have the transparency we want to share with the investors and to engage with them, actually proving we are creating the impact we want to. But if we are not creating, how can we course correct what we are doing to find the right way to create impact at the end? So measure things is crucial for sustainability.
Yeah, I think, bringing this to the very reality on the ground, when we're looking into a company at this point, we're definitely looking at what sort of this fund that I'm leading at this point is dedicated to the ocean. We first and foremost have a whole filter around activities that we consider as risk activities, where there's issues around excess fishing or there's proximity to extractives or pristine areas that need to be protected. So that's the first layer just at the beginning. But then the sort of framework that we apply in terms of criteria for sustainability in our business opportunities are topics as, for example, what is the carbon footprint of the company? And then the question is going to be, this is going to get very technical, is what is the direct emissions of the operations? What is the direct emissions of the suppliers to your operation? And then you have the direct emissions of the products around that then come out. So, and the network. Then which sort of energy are you consuming? Is it from CO2 emissions or is renewable? So this is sort of on the environmental side. We're going to be asking also, what is the gender balance of your company? What is the turnover of employees in your company? Does it have health and sustainability policy? We will look also at the governance level. What is the governance structure, the board meetings, the financial disclosures, the privacy, the protection of data? So at this point, when a company comes, we will be looking into all of that. I should say, most of them don't have any of this information.
Yes.
And that comes to another point on the conversation around how difficult it is to measure sustainability.
What we do actually, as we invest in early stage startups, we include in the investment agreement, we made a lot of criteria, so they need to implement such metrics in 1 year, for example. So it's expectable that they don't have such processes or metrics internally, because for that stage, it doesn't matter for them so much. But when they have one external investor willing to provide transparency for other stakeholders, showing how much impact they are delivering, we need to ask them to create new ways of measuring things, and we include that in our investment agreement actually. So they have this commitment to create new metrics, and also change if something is not working good. So it's part of our process.
Because it's also asked from us. Like I'm managing funds that investors gave it to me to manage, and they are asking me what is my own from the portfolio of companies that I have. What are my on these criteria which is gone through? I think you probably have the same. Tell me what is your carbon footprint of your portfolio. Tell me what is your gender balance of your portfolio, and I need to report. And I like to think that people are very, let's put it, wary. So in the word of the financial system, but the financial system is the Trojan horse that brought sustainability into the economy. It's because of the financial system that all these questions are being asked for companies.
Okay.
Not a popular saying, I would say.
But I do understand what you're saying is, even because the financial system does have the power, I think I can say it, to decide whether the investment goes, or the financing goes through some projects and not the others. So it does have the, I don't know if power is the right word, but I do understand. Let me just remind you, we are halfway in our round table, so if you have any question, just raise your hand, and a microphone will be...
oh, there's a hand there.
Okay, great.
It's not...
the mic is not yet. Okay.
Hello.
Great.
Hi, my name is Torsten. I was curious maybe to ask, because you also mentioned CO2 as one of the things you're looking at when you assess a company. Is there some sort of a KPI which drives investment decision, for example, CO2 per net sales or something like that, where you could categorize scope 1, scopes 2, 3, scope 3, you could compare different industries within industries, you could benchmark companies as one of the dominant factors. Is this something you apply, or what are the key KPIs, so to say, beyond the financials you're looking at?
Yeah, we don't have in this industry, unfortunately, one standard. We have several standards to work with, so at the end we don't have a standard. So in our case, as we are in that mid layer, like the software layer, it's really hard to measure directly the CO2 emission reduction at the end. We try to use an approach for a process chain. So we understand how the software is going to be used, and then at the end, we try to connect until the end of that chain to kind of evaluate the CO2 emission reduction, for example. But we discuss the KPIs for each investment. We don't have one unique list of metrics for every company, so we discuss in our, even if it's possible to measure, if we see a potential good company to invest, and we don't find a very good way of measuring the impact, probably we're not going to invest. This is important to us, to make sure we are sharing the real impact. This is part of this fund, so it doesn't make sense to invest in something that I'm not going to measure. So, but in our case, we discuss for each case what kind of a specific framework. It's hard, again, because we are investing in software companies, but it's part of our job for that fund. But you're right, we have KPIs for deciding to invest or not. If you cannot measure the KPI, we are not investing.
I guess, I mean, in our case, the answer is yes, similarly as you put it. Our commitment to our investors is that all of our companies have measurable contributions for SDGs. We are within what nowadays is called an Article 8 fund, so we're promoting sustainable characteristics of our businesses. And so I would say that at least a third, probably more, have a KPI of our companies in my portfolio that we invested, have a key performance indicator, a KPI, around reduction of CO2 emissions. So by their activity, we're measuring how much CO2 emission was reduced, and that is accounted as a performance measure for our portfolio.
Maybe I can adapt your question. And just imagine the following. Each one of you has had an idea, an investment idea, and is looking for financing. And all of you want to have a startup idea, have a project, and you want to choose the best of them, the best of their ideas. How would you choose? What would be the questions that you would make them? How would you decide among
we invest in
the project?
I think in different stages.
Yeah. We
are more, correct me if I'm wrong, but early stage, I think. But
I can do both.
Okay. But we are, first, top one is the founder, or the founder, the co-founders, and the people behind the idea.
The founder, so the person.
The person.
Okay.
As we are investing early stage, we know that probably that product will change. It's a really high possibility that the product will change when entering the market or facing the competition. So we invest in the founder, and the solo founder, for example, is hard, one founder, and a couple, for example, is another
very complicated.
Difficult, yeah, but that's the founder team. It's really important, and the problem they are trying to tackle. We need to understand that problem exists. Understand that the problem is important for this fund, is important for the planet as well, and how they are thinking about the idea to solve that problem. The 4, 5 question we make is about the product itself. So it's not very important at the beginning. For us, the most important is the founder, the problem, and also the passion they have to solve that problem. And of course, in certain point, we try to understand how they are trying to solve, what they are trying to build, and we support them. We are from venture capital. So the venture capital, we are providing money up front so they can develop the product, the idea, test the market, what we call the product market fit, to see if that product actually solved that problem, the business market fit, so to see if that product makes money at the end, and we are helping them to navigate that journey and to succeed. So that's
very interesting, because you're binding the idea with the person, with the founder. So if you feel that the founder just wants to get rich and get out, probably you won't feel their commitment.
They can have money from other sources, like from the banks, from the family, from the friends, whatever. Yeah, but we as venture capital, we are providing two things, capital and expertise. So if they don't need expertise, we are not going to invest. So we are going to invest so we can collaborate with them, help with hands-on approach, help them to face the challenge they have, and also change the product if it's needed. That's why we invest in the founding team first.
André, do you want to add?
Sure.
your view?
We are, well, I'm now mostly focusing on the Ocean Fund that we have. We are subscribers to a series of initiatives, as for example, United Nations, and this is going to be a long name, United Nations Environmental Program Financial Initiative Sustainable Blue Economy Financing Principles, which is probably as long as it shows the process is, but to say that there are a lot of areas where if someone shows up with a project at this point, just make it more practical. If some of you now is here thinking about studying underwater engineering and finding fantastic ore or minerals in the seabed and wants to mine it, I can't invest in that business. So up front, there's a series of sectors where, because they're deemed to be unsustainable, we can't invest. So upfront just doesn't fit. If it doesn't fit in any of my areas around the ocean economy, if, for example, it's an agriculture product, it doesn't fit. So we kind of have a first filter around that. Then, and of course, if you're violating human rights, if you're doing genetic altered organisms, which we cannot invest. Then there's also, as Luis was saying, same with us, if I can't measure your contributions for SDGs, I can't invest. If you have this, even if it's a very sustainable algae cosmetic, and I'm going to ask you, okay, but what is here the contribution for the Sustainable Development Goals, and you don't have a clear answer for that, I can't invest, because I cannot measure the sort of impact you're going to do. So these are the sort of sustainability filters that we apply right up front, and then of course team and product market fit, and then as we, I mean, same sort of characteristics that we put forward. I think on stage here you have two venture funds, which have very specific mandates for taking risks on the early stage. There's other sources of funding, as you also mentioned. Sometimes these businesses, they need grants, they need philanthropy to come in and provide sort of development till they get a stage where we can get in. But from a sustainability point of view, it is very clear that we have a strong mandate to find what is very well defined within the characteristics of do no harm, measure your contributions.
So the first filters would be sustainable sectors, ethics, metrics. Okay. Any more questions from? I'm not sure if yeah. Orange.
I just have a question because you were talking about like how our financial system has built like the necessity of using our renewable energies, and I was just going to ask if it's like related to our like use of non-renewable energies in our economy, and like when they start lacking, like is it related to that?
So the link between investment and renewable energies?
No, like if it's like related our use of fossil fuels,
okay.
and it's like our necessity of using like the renewable energies.
Yeah. Yes.
Well, the straightforward
answer is yes. Definitely, we can't invest in any fossil fuel business related, even to the point where, I mean, here's where things get complicated, just to make it more fun. If we're dealing with some technology that makes it better, not as bad, and sometimes there's a tension. Should we help it make it less bad, or we just leave it altogether and just find something that is actually an alternative. Our policy is find something of an alternative. But there's a clear argument to say, well, we can try to make it less bad, but we cannot do. But we do, and I am invested in a company that is making offshore floating wind platforms more cheap and more sustainable, less impactful to produce, and so we can have more wind-powered offshore parks. We have that. We have another company that soon, well, I cannot tell you much more details, but it's going to be in the same area. Hopefully very soon we can have it in our portfolio. So it is an emerging and very urgent sector that we invest in.
Yeah. It's tricky. So our goal, obviously, would be to have like a matrix of 100% of renewable energy, but sometimes we need to choose to invest in companies that reduce the negative impact, not only improve the positive impact, but we could invest in some product helping to reduce the negative impact of fossil fuels, for example. It makes sense for us. But we would prefer to have much more renewable energy projects being developed instead of that. But at the end, the net impact is important. So it would make sense, but it's hard. It's an internal discussion we in our fund we have in the investment committee to understand. But if the net impact is positive, it probably is a good idea. But it's a hard decision. It's a hard decision.
Let me look at ESG awareness is not the same worldwide. Probably in the US it will be stronger.
Yes.
But there's a sense that there are some pushbacks, are there, against ESG?
For sure. And I think since the beginning of this conversation, I am particularly fond of this perspective. Since the beginning of this conversation, we've been using here good, doing good, good impact, and I think everyone needs to really look into what is good, because what is good for me might not be good for you. Cultures are different, geographies are different. It is true that we might share a lot of values, and I think this is where everyone needs to really think about their values, think about what they want to see in the world. And it's fair to assume that there's people that have different views, and there's currently certain aspects of what is called the environmental, social, and governance that are being resisted, to say, one of the ways of putting it, because there's a perception that people don't believe in certain of these values. The US currently is one of the markets where there's more strong resistance to some of these criteria. I am unsure of how. I mean, I think it's also been very politicized. There's starting to be a lot of correlations between the ones that are in favor of ESG or sustainability and the ones that are not in favor, with political parties and political views. I think sometimes people get lost in politics and they lack the capacity to really understand what we're really talking about. And we're talking about, regeneration of the environment. We're talking about not cutting trees or not polluting the seas, and I think that's, I wouldn't say it's universal, but for sure that's hard to fight back. But it is true. But there's also another view, which is around how hard it is to measure all this and the burden that this brings to the economy and to the economies. And we just spoke about how startups are asked, like, tell me what's your carbon footprint, and it's expensive and complicated to measure that. And they can't, as year one of their operations, to do that. And if I'm going to ask them, or if I'm not giving them finance, if they don't tell me, then I'm curtailing innovation. I'm curtailing the progress of very good solutions.
In Europe, when you look at the Draghi report, that just recently stressed that Europe is getting behind if it doesn't invest more on the innovation, future sectors, and so on. How does that cope with the needs that Europe has?
I think Europe is leading the way on ensuring that progress is sustainable and it takes into account its environmental aspect and social as well. I think what came from the Draghi report is that's very meaningful and important, but we need to be mindful of what are we really then imposing upon the economy. That is always a tension with what we can measure or what we can ask and what is the ultimate goal that we're trying to achieve. And my personal perspective into this is that we probably went, or we're going probably too far in the level of regulatory pressure. And we need some space.
Yeah, it's interesting that we have, Pedro said about awareness, but it's also a matter of education, not only awareness. People knows about, but don't understand exactly what is sustainability and sustainable in long term. And this discussion about ESG and anti-ESG, this is, for me, it's driven by politics, ideological stuff, and also people thinking on the short-term profit and not long-term sustainability. It's not only I believe or I do not believe in sustainability or in climate crisis, but I want short-term profit, and I don't want to wait longer for achieve profitability, for example. And it's not funny, but interesting to see that, for example, US that they have a lot of this backlash against ESG. They have funds, anti-ESG funds, investing only in tobacco, defense, and fossil fuels, for example, only for those industries. In their perspective, those industries are not being included in the venture capital market, so they need specific investment products for them. It's for me, it's not funny. It's sad at the end, because it's a lack of education, not only a lack of awareness. It's education mainly. People don't understand why it's important to avoid fossil fuel and invest in renewable energy. They think only on short-term profit. And this is the biggest problem I see.
It's just to add a quick one, since we're at Planetiers and this is a world gathering, and just also to put a global perspective, if you have an ESG fund that can only invest where there's ESG information, you're literally saying that it's going to be extremely difficult for that fund to invest in the global south, where there's lack of data, where there's emerging markets, where there's low-income countries with still building up their infrastructure and regulation and even economic activity. Is that the goal of sustainability? So there are tensions into this that we need to be mindful of.
We have one more question from the audience.
Good afternoon. I have a question regarding startup companies. Do you think the companies looking on environmental challenges should start on a local basis and then expand their businesses to an international scale? Or do you think the problem should be always addressed as an international problem and then implemented on a local scale?
Thank you. Should you start local and then expand, or
our approach is from local to global, but we always look for startups that will actually tackle global problems, not only local problems. It's important, but our approach is global issues, global challenges. But we start locally for several reasons. First, it's easy to start, it's easy to test the market, it's easy to develop solutions. And then we actually, when I said that we provide expertise, we have teams in different countries, and we help them to expand to those countries and also connect with other investors. So for us, it's mandatory that the startup is going to be global at a certain point. The sustainability challenges are not local. It doesn't make sense to have an impact in one country, not on the planet. So it's our approach is from local to global. But
Right.
but the other approach is not wrong. It's probably is good for other groups, but for our way of working, it works better to start locally.
I think the question is a tricky one, because if you're a startup and you come to me and your business is already global, I go, oh yeah, fantastic. I mean, no problem with that. In the end, as we said, scalability is the key. Is the key for a venture capitalist. You want scalability, but also scalability is the key for impact. You can do meaningful impact locally and still be very important to that community. There's nothing against that. But from a venture capital perspective, when a startup comes to me, I want to see scalability of impact. I mean, as I said, I did my own social enterprise with micro impact, and I'm very proud of it and very happy. But it's local, and it's there, it changed the lives of a few people, but it didn't get venture capital.
Yeah, what we do actually is that we often find good products and startups in different countries, like in Africa or Asia, and we help them to come to Portugal, to open like a tech hub here or a local branch, and then we can collaborate with them in Portugal and then help them to expand. So not always they are born in Portugal, but we can help them to come to Portugal and collaborate with us from Portugal to the world. So this is also happening.
We have one more question here at front. I'm not sure that I'm seeing everyone because of the lights, so if there's any arm raised, just please. I don't think so. I think it's all good. Yeah.
Hi, good afternoon. My question is about the sustainability metrics. On your sustainability metrics, do you only use data and stuff that you acquire, or do you use other companies' certifications, or other companies or communities or groups of those companies already a part of, in a way to give more credibility to the saying that that company is sustainable?
Well, best practice tells you that you want third-party validated data. The reality usually is more challenging, especially at early stage. So we first and foremost take the data the company has. As things get more structured and the company grows, then we try to have third-party validation. Getting to external providers of data, typically only when companies are at larger stages of development, where then there's within the system, the sector is measured and there's public data available. For example, public traded funds, they use third-party sources. When we're talking about early stage companies, you work with what you have.
Yeah, at the end, VC, normally, we try to help startups to grow, but often the VCs are harm to the companies. That we ask a lot of information, KPIs, report, and other things. We are avoiding to create new procedures and processes to the founder. So if you have specific metrics already being reported, we will evaluate, see if it's good or not, and try to request minor changes. But we are avoiding to ask for much more reports and bureaucracy at the end. So for the early stages, it is important.
Okay, one more question there, please.
Thank you.
Maybe
Maybe just building a little bit on the question before. Yesterday we had a presentation from the B Corp movement. You aware of that? Yeah, okay. To which extent is that, because they offer a score oftentimes to startups in the beginning, but then also when at a higher stage and there is a scaling or a rating system, to which extent does that have relevance for you assessing the, let's say, the triple bottom line of companies?
For me, yes, it adds value, of course, but it's not enough. We are always going to do our own homework and add our. We must be accountable for that at the end. So add values for the company, of course, but we need to add another layer to make sure we are reporting the right information. It's not for us; it's for the investors at the end.
I have, I think, one and a second about to be B Corp in my portfolio. It's not necessarily a requirement, that's for sure. And we're very happy. Personally, I know the movement and supportive of it, and I think it's great. I also could add that one needs to be mindful of ownership structures and how to avoid complicated ownership structures at early stage companies when have lean capitalization tables, is meaning shareholders clearly ownership and incentives align is really important for the quick growth. I'm just saying this as a I know probably my colleague that made a presentation might be debating that, but I'm just putting it forward to as a sort of aspect that needs to be considered.
We have time for 2 more questions, one over there, and if there's any other, just please raise your hand.
Hi, thank you so much for your time and for your presentation. There's been a lot of talk about dealing with the impact of production and mostly immediate impact. So the goals have been set for 2025, 2030, up to 2050. I wanted to know whether there's any talks about intergenerational justice and investing in the long-term effects, because consumption will inevitably affect the consumption capacity of future generations. So is intergenerational sustainability something that fits into startup investment?
I think it is, of course. I think earlier on, Pedro made a question around what have we learned, right, in the last 20 years. And I think what we learned also is that we were falling short of our definitions of impact and what is necessary to ensure regenerative models and to ensure that we have a true regenerative paradigm that can continue sustain life on the planet and make it better. In that sense, those solutions, when they are well crafted into an economic solution that generates profits, they are, in our perspective, highly attractive. I also have to say that they're also, at this point, only start showing up. I mean, for example, just to make it more clear, companies that come forward pitching to me, and I think in the last 2-3 years now, I've went through almost like 1,000, me and the team, 1,000 pitches, and I don't have data for that, but I would claim that companies that have a full life cycle analysis of their products are infamous. Like they're like a small percentage of them. I start seeing them now. Some of them coming up and saying, "Well, we have run full life cycle analysis. We know how our product is gonna be treated and reprocessed, and what's the value that it comes with it, and then we can start talking a serious conversation around what is here the model that put forward to then invest into them." So I think it's not in my mandate to look for just that. But I would assume that in the future, it wouldn't shock me that some of my investors would start asking for that.
Luis, before you answer, maybe we can have the last question so that you can combine them if it's feasible. But thank you.
Hi again. I don't know if it's visible, but you guys will tell. My question is actually very simple. I know each of your funds, probably yours focus on ocean and yours focus on startups, but what do you think is the emerging market for sustainability? Because, for example, CO2 has been longer on the table than novel entities, for example. So what do you think is the emerging market that right now is more prone to investment?
You're talking about sectors, industries, or regions?
Sectors.
Sectors, okay.
It's hard to say, like, to have a ranking of sectors. We have in our scope, we have different subsectors within sustainability. I can mention some, and we also have the Portuguese vocation for some, like agriculture, agrotech, wine tech, water, clean energy. Portugal is front of some of those sectors, and they are also tackling global challenges. All of them are important at the end, And Portugal is for the 2030 program. Portugal is committed with one UN's SDG. One of them is the SDG number 9. It's included innovation. And we are trying to invest in innovation for fighting climate crisis and climate change. Doesn't matter exactly which subsector it is, but as I said before, we are evaluating if that idea or that solution or that problem is actually global, and if we can collaborate for that scalability. So the subsectors are that, as I said, for example, and we are kind of following the UN's SDG and connected with Portugal 2030 program as well in our scope.
You want to add something? Anything?
Very short, and we're running out of time. I think in sectors that have been very active, everything around biomaterials, we're talking about bioplastics or biological compounds that will substitute heavy metals. So we've seen a lot of action there. A lot of stuff on renewable energy, as you were saying, with not only new ways of producing, but mostly optimizing, reducing costs, increasing efficiency. These are, and of course, I think this data is emerging on the ocean is something that, it's funny because it's a market that it's being created. It's not there, but there's a lot of interest piling in, and I think we're going to see beautiful things happening.
Look, thank you very much for all of your questions. You were wonderful, and thank you very much
Thanks
also.
for the conversation.
Yeah, great. Thanks.
Thank you.